All right, we're back. Welcome to the weekly roundup. First one of the year, January 13th, 2023, not 2013, as I put in the invite to everybody, apparently. Little mistype there. Sorry about that.
Yeah.
And Friday the 13th.
Love Friday the 13th.
Yeah.
Great way to start.
Well, the market was pretty good today, so that's yeah, it didn't affect the market at all.
No,
In a negative way.
wasn't scared.
Yeah.
No. Yeah.
So, what have you been up to? Give us the recap. It's been a few weeks.
Well, yeah, it's been a few weeks. Lots has gone on, lots to cover. Certainly, I'm excited to get going again on these and try to keep the information current and what's going on in the world. Obviously, the last couple of weeks, as I think we adjourned, I can't remember, the 23rd maybe of December. And since then, generally positive direction for risk assets and bonds. So we've had a good couple of weeks. Certainly in the start of the year, we've had a good couple of weeks. Volumes were light into the end of the year, and now we've seen some, market participants come back. Read a ton of forecasts around where we're going, what's happening. We'll cover a lot of that next week, but there's so many different opinions around where we are and what's out there. And hopefully this year we can continue to do a good job of kind of differentiating between what's happening in the economy versus what's happening in the markets. And so, since what did we do into year end? Really look to fine tune, did some tax loss selling in a few places, added to existing positions. But I'm quite optimistic about where we are. Some of these companies and growth areas have been just actually absolutely demolished since the end of last year, and have had a great start here, and I'm quite optimistic about what's ahead. But that's lots to do, lots to prepare and think about. But I think the biggest thing that I've been paying attention to is that differentiation between what's happening in the market and what's happening in the economy, because they're two very different things.
Right, exactly. Well, I've noticed some activity in the portfolios. What have you been doing over the last couple of weeks as far as that's concerned?
Yeah, so some of the areas and names that I've liked for a while, like some of the alternative energy spaces that we've been talking about on and off for probably a year. These companies are pretty highly levered. So the Northland Powers, Algonquin Powers of the world are pretty highly levered businesses. And so, been looking at some of those names. Algonquin Power kind of finished the year down something like 50-60%. It's a good business that's paying good dividend yield. So been looking at companies like that. But at the same time, some of the other areas where I think offer some of the best risk reward in the next couple of years would be tilted towards some of the technology names that have been hit really hard. Amazon and Shopify, these are names that I'd never even considered for a couple of years. Starting to think that that's an appropriate time to look at having these in portfolios. So yeah, real different start to this year than last year.
Gotcha. Okay, anything else before we get into the charts here?
I think when we've been a couple of weeks now working back to work here, we spent time in the bank branches, as I mentioned. So really a lot of discussion around rates, and so we'll continue to talk about that. But I think that's probably the most important piece over the next 2 quarters is what happens with the central bank's rates globally. Obviously, Canada is what matters most to us immediately. So we got the Bank of Canada with their first rate announcement on the 25th of this month. And real mixed bag as to what they're going to do. BMO CIBC came out and said they expect another 25 basis points, where we think they're on hold. So that I think will be a pretty important time to watch. We have Davos coming up next week, I guess 16th to the 20th, which is the first time they've had it in a couple of years. So, well, I don't think anything significant comes out of those meetings that we hear about, but historically, this is where the central bankers of the world have globally come together. And anytime we've seen a material, we'll say pivot or change of direction from central bank policy has come out of these meetings. So, I think the next couple of weeks, what happens after that will be interesting. And central bank in the U.S., was on pace to raise 50 basis points in their meeting February 1st. But after some of the data that's come out the first couple of weeks here, that number's moved much closer to 25 basis points, so somewhere around 80% likely of a 25 basis point increase. So I'd say rates is a big part of what's going to happen here and have a major impact on stocks. So that's what I'd be watching real closely here right now.
Yeah, I'd be surprised if they raised again. I mean, I think they've accomplished what they wanted to, but who knows? We will find out. What day did you say that? The 25th?
25th, yeah.
Yeah. Okay.
Yeah. Yeah.
Well, no, then okay. While you get the slides up too, we can start reminding people we've been making contributions to TFSAs on the regular. The limit this year is the limit contribution. Annual contribution is 6,500. So if you would like us to make a contribution to your account and we haven't done that already, please let us know. We can get that done for you. All right, we've seen this one before.
Yeah, we can't start the year without something like this.
Yeah.
I just thought it was important just to put this out there. Obviously, for those of you that have been watching, following along closely, like this is just the grids on. We follow Hedgeye's economic forecasting data, which is there's 4 quadrants of a combination of growth and inflation, and the important thing is just really what's coming ahead of us, and that's been one of the challenges and opportunities, I suppose, is trying to do your best job of looking ahead and seeing what's coming forward. And so, as we look, you don't need to get into the granularity of this. However, the red is growth and inflation flowing together. So we'd look at Canada here, where you have multiple quarters. This is Q1 of this year and Q2 of this year with growth and inflation flowing together. The United States has that same backdrop. And if you look at that kind of on a median score, if you look across all countries around the world, that'd kind of be the setup right now. So, when you think about, that's why I say the economy and the markets, and at some point, the markets have fully priced this in. What point is that, I guess, is the question. And what happens on the other side of that is, I think, more important than where we are where we sit today. So if we look at what happens on the other side of this, you have inflation decelerating and growth accelerating. And so that's pretty much as good a backdrop as you could get. That's when you want to own consumer discretionary, you want to own financials, you want to own kind of growth because rates are coming down. So, this is what's ahead. This is where we're currently sitting in. But I thought this is an important point to say, this is where we are, but this is what we think is coming ahead.
Great. As usual, if anybody has any questions, just put them down below in the Q&A button there. All right, what do we got here? U.S. Treasury curve.
Exciting curve, but it's hard to believe if we look back 1 year ago. This is essentially January of last year. The red line was the yield curve, natural sloping yield curve, which is typically a sign of a reasonably healthy economy. That's what we saw last year. And fast forward to where we are today, this is what we see today from a curve perspective. So again, we have a big inversion here where you have the 2-year kind of in this range. You got something like a 70 to 80 basis point yield curve inversion, which historically has been a signal of a recession. Also, this is worth paying attention to from a mortgage perspective as well, particularly in the U.S., where most of the U.S. mortgages are based off of 30-year. And so just quite a dramatic difference from 12 months. What happens from here? I actually think the whole curve shifts down. So I think this is an important thing to continue to pay attention to, but I can show you how quickly it's changed over the last 12 months.
Yeah.
2 more quick ones, just as I went through a bunch of research this week, a few things that jumped out at me. This is where light vehicle production's happening in the world. Well, I think most of you probably knew a lot of this data. I didn't realize the dramatic change that we've seen over the years, which is if we were looking at kind of where we are today, this is North America, Europe, and China. This is 2019 versus what's happening today and forecast in the future. This is BMO's most recent update on it. So you look at this, like this is a continued massive acceleration by China for light vehicle production, which I thought, again, very interesting to see how things are moving, where it's going, and worth kind of paying attention to.
Gotcha.
Last one. So I've had lots of conversations with people just around socially responsible investing, batteries, just on the theme around how cars continue to be a major driver for what's going to happen in the world. Cars, major driver. You see what I did there?
Very punny, very punny.
I try to look for opportunities, and I've had clients ask just about where the opportunities potentially are in Canada. We're super heavy resource based, so some of the spaces that look best would be kind of in the mining sector. So it's a bit of a gray area, I think, for where people are looking. But there's a company called Nouveau Monde, and they're a graphite company. They're looking to build a graphite mine, largest in the world in Quebec. And if we look at what the major inputs are in the batteries that go into these vehicles, graphite is a major contributor to the composition of batteries. And so it's an interesting company. Continue to watch it. They've done a good job of getting themselves to the point where they can build a mine, but these are going to be major inputs for what happens to batteries. I look at a lot of these companies, particularly in the US, but this is one that's caught my attention, and I thought this was an interesting chart that gives a breakdown of what the composition of the batteries look like.
Gotcha.
Yeah.
Good one. Good start, Ben, on the Ben chart segment.
Yeah.
Good stuff.
Kinda
No questions on that, so let's keep rolling here. What's in the crystal ball for next week?
Well, I think what we start seeing so far out of the gate is just guys get a sense for what the capital markets have been like too. Whereas we've had a few equity raises this week and a little bit last week, and CIBC raised $1 billion in a bond this week. So market still kind of seems like slowly coming back to where it was. And so next week I'd be watching. Davos is happening, so there could be some news that comes out of there, so we'll be paying attention to that. The general markets look a little bit overbought here, S&P and NASDAQ. So, and potentially some of the crypto areas as well. So I'd be looking for potentially some softness there. The Hedgeye has actually come out with a short Canada view. So that's caused me to dig in a little bit to where and how they've come to that conclusion. So lots of stuff to cover next week. But I think from a market making perspective, Davos would probably be the most important thing.
All right. Did you we do have a question from Eric LaRue. Did you he said he sent them via email.
Oh,
so I don't know if you can check your email. I didn't get them in mine, Eric. So if you
let me take a quick look here.
Unless it went to junk. While that's going, I see Henry has a question. Henry wants to know, we seem to be well lit. What do we use for lighting? I'm well lit, all right. I use like this ring light. The pretty lighting and camera stuff is relatively inexpensive now. Henry, I could send you the exact model if that's something you're interested in. Ben has a couple even smaller ones at the office. I don't know if you would use the same ones at home there. What do you got there?
At home. This is the one I use at home.
Yeah, I think that's the same brand I use. You get these ring lights. I think they're less than $100. They're quite, yeah. Okay. Perfect. Did you get the email from Eric? Did you see?
I'm looking at, it looks like it didn't come through, so, but I can throw a couple comments. Typically, I think Eric's asked just about cycle, maybe where we are with energy and potentially with some of the precious metals commodities. So I'll have a couple comments on that. If you do want to type some of the questions, if I don't answer that, fire them in there while I'm answering those. With this backdrop, typically gold's been a well-performing asset class. So, we're quite optimistic on gold and silver and the miners at the present time. And that's with the kind of the current setup we have. As for energy, commodities, the rest of the base metals, I'd say I'd be quite cautious in that area. You know, as inflation comes down, that'll continue to put pressure on those stocks. So any of the base metals, I don't think it's the time to own them. At some point, copper again will make sense as we get into that quad one. At least that's what we're seeing. As for energy, look, I think I've commented a little bit on nat gas and oil. You know, they were both quite significantly higher last year in February, March. So I think they're going to be a drag on inflation over the next 2-3 months. And so, you know, I'd be quite cautious, I guess, short term. You know, cyclically, I think they probably continue to move higher, but short term, I'd say stay away from, because I think we're in the middle of a recession, as I've said before, and the market's starting to price that in.
Gotcha. Oh, I see them here. Okay. Couple of questions for Ben today. I read the interest expenses on the US debt is at 775 billion, now close to being the first line item in the US budget. What are the implications of that for the US monetary policy, the US economy, and the US dollar?
Yep. Great question. I think obviously we've had a strong US dollar here. If you look at asset class performance over the past 12 months, it's been the only thing that's been in the black, I guess, with the exception of oil. But I'd say major asset class has been US dollar. So you've had US dollar strength as liquidities come out of the system. And so the kind of reaction function to a slowing economy, we'll say AKA recession, is increasing liquidity, which will force US dollar weakness. Probably you'll see bonds rally in that backdrop as well. You'll see rates come down, you'll see central bank cut rates. I think from my perspective, it is an issue that they're conscious of, that rates have creeped up, and the government's costs have increased by about 100%. I think assuming we stayed elevated like this, it'd be a 100-pound gorilla on their back trying to drag the economy along. I don't see how they can with rates where they are. So the answer is we're in a recession. If rates continue to go up like the 70s, which I don't forecast and I don't foresee, they'll continue to force the U.S. economy lower, and I think that would perpetuate the problem. I don't see that as a base case, but certainly it's something to pay attention to.
Gotcha. Okay, and you may have touched on this already. Eric's also looking for an update on gold, silver, copper, and the miners over the next 6 months to a year.
Yeah, I did give an update on that. Yeah. So optimistic on all fronts. As for 6-9 months, I'd say optimistic. Let's see how this evolves, if we change from my opinion, except for like I said, gold, silver, those positive, but as for the base metals like the coppers, I think not yet.
Gotcha.
Yeah.
Okay. Any parting words? Anything I missed from a operations standpoint?
Yeah, start of the year. So as you mentioned, TFSA contributions, we've been doing them for people as they've come in. We have a handful that have asked us to put that on continued follow-up, so we've been doing that. So let us know on that. RSP contributions, things like that, starting to come as well. So if there's something, feel free to give us a call. I'd say from the last point of view, I mean, we've been talking about some of the things we want to roll out this year. It's just some more specific commentary around what it is, some of the planning things. I know we've had questions. Henry had sent a question about insurance and some ideas around planning there. So we've got something in place to roll out where we can provide some guidance and things like that. So that's in the works. So we're hoping to continue to educate as much as we can. And if there's anything you think we should be adding into this on a weekly basis, please let us know as well.
For sure. And also for the new year, we're still trying to hire that admin assistant. So if anybody knows anybody, that would be great. Or customer service person, that'd be amazing. Absolutely. All right. Well, that's it. Hey, first one in the books of the year. I think went great. Great job.
Yeah,
buddy.
we did great. Nice work.
Awesome. Okay. As usual, everybody have a great weekend and we'll see you next week.
Sounds good. Thanks. Take care.